Right, good morning, traders. We've now got the non-farm payrolls data out of the way. We're into the closing of the week and a busy one across all pairs, really. Pretty volatile. To be expected, first week of a new month with traders coming back from holidays. And towards the end of the year, the last quarter of the year. Right, so what I'll do is I'll, as per usual, go through each asset. And as we can see, I'll just do this quick video and then I'll get on with a written analysis and then scenarios for my 10 a.m. trading window. We've got gold here breaking up. Still no signs of real exhaustion, according to the trend predator. In fact, we had a fake out low. This is therefore resetting the daily cycle with breakouts. You'd expect there to be an extension with this correction and continuation. On the monthly chart, we're somewhat more bearish. We've got 3 months of continuous breakout, but it has been coiling. The monthly chart are the purple lines. If I come out to a 4-hour chart, it might be a bit clearer. And in that regard, okay, so as you can see, we've had a continuous rally and then this coil. So who's not to say that we're not going to get a measured move of this coil? Here's the inside month. So if we were to measure that, there's the low, there's the high. Okay, we've not even done a 100% range expansion of that inside month. So the inside month range expansion is the month of May. So the range expansion comes up near, well, it says it there for you, 3749, call it 3750. So that's my upside target. So just putting things in context there, really, we're coiling. And markets do one of 3 things. They break out, pull back and continue, or they break out, pull back and fail. So if we're breaking out, we're yet to pull back. So of course there are prospects of a pullback, but as I've just explained, we've potentially had a reset yesterday, potentially, because we broke down, pulled back, and we failed, and we're going to the other side of the day's low that we broke down, which was Monday, Tuesday, Wednesday. So Wednesday's low we broke out of, fake out low, and we've now taken out the other side of what was the previous all-time high of the breakdown day's high. So that is bullish. So fake out low and a continuation. So this here is a market that's broken down, failed to stay out, and we've come up the other side. So for me, that's bullish, and there are prospects of a continuation to the range expansion target I just mentioned. which I've completely forgot where it was, so I have to do that again. So 100% range expansion towards 3750-ish. Now, obviously, it depends on your broker, but that's where I have it. 3750-ish. Okay, that's my upside target. That's gold. Now, obviously, that's not something that's set in stone. What we also have on the chart is 3L on the 8 hour. So while we have a uptrend context, it's only one star because we've been in a continuous breakout on the 8 hour candles. Now, the 8 hour candles, by the way, are sessions split into 8 hours. So we've got, let's get the days split up again. So this was the Asian session, this was the London session, and this is the current New York session. The Asian session was an inside session, and inside periods are signal periods for me. So if we've taken out the high of that inside bar, pulled back and then continued out of it, then for me that's bullish. So regardless of there being three consecutive breakouts to the upside, I'd just be cautious that this isn't a market that can't continue higher, so long as we stay above the Asian highs. Okay, so gold I am bullish on. How I would play it, well, it depends on how we are set up. Following the Wall Street Open, 9:30 a.m. Gives us a high and low when we get to 10 a.m. That's the first 30 minutes, aka the opening range. So at this point, we've got no idea what that's going to look like. But if the Trend Predator Pro and the price action behaves, if both are bullish, if we have the Trend Predator Pro bullish and the price action around the Wall Street opening range bullish, so either what we could have is, so long as we stay above those Asian highs and above yesterday's highs, if the price action breaks out, the most simplest way to look at it would be if the Wall Street range, let's say, looked like this, and the price therefore was making a low and a high, and if we say faked out low and then broke out of the Wall Street highs, then I'd be inclined to take it long. And as I've said, we've got an upside target, not to say that we can reach that all in one day, far from it. The ATR is only $44 to target from where we are currently, is probably triple that or thereabouts. So that might be something to look at next week, but for the meanwhile, there's no reason why we can't continue higher today. What we could do is we could do a range expansion of the Asian and New York coil. So if we're breaking out of that, so if we take the low of New York to the high of Asia, that's the coil. And then if we look at the ATR, $44, takes us up to a 300% range expansion target of the New York and Asian breakout that's occurred here in London. Late London non-farm payrolls data. We're now in a new 8-hour session, New York. Let's see. So long as we stay, as I said, stay above the Asian highs. So long as we stay above this coil, let's make it support. I'm really doing a deep dive on this. I didn't mean to get into this so much. I want to cover other assets in the same video. So we'll just leave this as a gold video. So long as we stay above that coil, then I say we're looking good for a continuation to the upside today. So all depends on how we behave throughout the Wall Street Open, and my trading window is from 10 a.m. onwards. We may or may not align with the bullish thesis. That's what we've got at the moment to work with. Failing that, if we were to come back below yesterday's highs and therefore putting into jeopardy the coil, then we would be looking at a sell-off in line with 3 consecutive breakouts to the upside on the sessions, and that will be our high for the day perhaps, and we'll be looking for a move back through the coil, targeting the lows of New York, which by the way is where the value area low is of yesterday, around about 3.535. And then if we break below there, then there's a wide open space into the London lows, which will be taking out yet again the lows from Wednesday into this peak formation low area. I'd be cautious around there. Don't really like to trade into peak formation lows. We've already taken out the peak formation high. So we've got this peak formation high from Wednesday, peak formation low from Thursday, giving the baton to the bulls, which have stayed in control. So that's why my thesis is still bullish. But if we do come down through that range, then there are prospects of a retest of Wednesday's lows near 3526-ish, depending on your broker. 3527, call it, as a target to downside, and then below there you've got yesterday's lows, which I don't know that we make it all the way down there, but we might do. Around about 3.511, and then we have it. Okay, so that's my gold analysis. In a video, I'll do a write-up, and we'll look at other pairs as well.